This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. I'm Carol Massar. Tim, as you know, has been off this week, and lucky for us, we've got Jess Menton in the house. You know she does double duty for us often here at Bloomberg, covering the equity markets and so much more. Great to have you here on a week where we see the S&P on track for its best week since late June.
That's right. And even though under the hood, when you're looking at an index level, seems like not a lot's going on. If you're looking at single stocks, though, because even though we got past the bulk of earnings, we still have more next week, Deere and Cisco.
It's a good point. NVIDIA still to come at the end of the
August
month.
27th.
So much going on. All right, folks, we're going to get into the market trade in just a moment. We're going to talk about Fannie and Freddie soaring. And the question is an IPO coming? We're going to get kind of a history lesson. Thank you, Michael McKee. He'll be with us in just a moment. Plus, we're going to talk about the new world order. We mentioned geopolitics, Jess, and I feel like White House pretty busy. Leaders at the White House, some announcements. We're wondering, does the Russia and the U.S., Ukraine do a deal? There's a lot there.
There's a lot happening. Also, Upwork's CFO is going to be joining us on the latest quarter, and noted tech analyst Mark Mahaney at Evercore ISI on AI and none other than chips, right?
And I got to say, so many of the companies that reported earnings this week, including some of the big Mag 7s that reported last week, he covers them all. So I can't wait to get his view on all of that. First up, though, let's get to the trade for you on this Friday. Let's turn things over to Charlie Pellet. He is back.
Hi, thank you very much. Do want to begin developing story right now. Red headline on the Bloomberg Professional Service. The White House says it will clarify misinformation on gold tariffs. That, according to an official. The gold order to be posted in the near future. Again, according to a White House official. Certainly, that announcement will be closely watched. Again, the White House saying it's going to clarify misinformation on gold tariffs. Keep it locked into Bloomberg Television and Radio for the latest on this developing story. As we get details, we will pass them along. S&P right now up 53. That's a gain of 0.8%. We got the Dow up 252 now, up 0.5%. Again, the S&P right now trading at a record. Nasdaq up 214, up by 1%. Your 10-year 4.27%, but the 2-year 3.75%. Gold down 0.2%, 33.90 the ounce on the precious metal. And again, repeating that headline, the White House will clarify misinformation on gold tariffs, according to a White House official. Crude, West Texas Intermediate, we'll call that flat on the day, 63.89 a barrel. Again, recapping, stocks higher, S&P up 0.8%. Stay with Bloomberg for the latest on any developments around gold. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And we do see gold futures slipping a little bit on that headline. Charlie mentioned the White House to clarify misinformation on gold tariffs coming from an administration official. So again, we are seeing futures just a little bit lower, down about 0.1% here. And this after the White House to clarify tariffs. So we'll look for news on that. We also, in our 3 o'clock hour, we're going to dig into why this has created such a stir when it comes to gold trading. So we'll talk about that with our Joe Doe at 3 p.m. Wall Street time. Hey, in the meantime, I don't know if you checked out shares of Fannie Mae and Freddie Mac. I mean, they are just soaring off the charts.
It's incredible, too. And just given where they've come and gone and being in that conservatorship since the height of the global financial crisis.
Yeah, it's a really good point. And it feels like we need a little bit of a history lesson. The news that's got them moving, we've got Fannie Mae, it's up about 20%. I'm looking at Freddie Mac up about 22%. And this is after the administration is said to be preparing to sell shares in an offering that could start as early as this year, again, according to that senior administration official. With the latest on that, and kind of, as I said, a history lesson, Bloomberg TV and Radio, international economics and policy correspondent Michael McKee.
Bring in the old guy for the history lesson.
Well, it's not the old guy. Like a fine wine, Mike, you just get better and better. But no, There is history behind these two names in a big way.
Especially you look at Fannie Mae was chartered in 1938. It's been around for a long time. Freddie Mac came along in 1970. Stepping back for just a second, here's what they do. They basically buy mortgages from banks and mortgage lenders and package them into securities and sell them to investors. And that way the banks have more space on their balance sheets to make loans. And because Fannie Mae and Freddie Mac have sold these off to investors, who are anxious to get the yield on them, they can predict essentially what their mortgage costs are going to be, and so they can have keep mortgage rates generally fairly stable. Along the way, from the time Fannie Mae was created, they created the 30-year mortgage, which is, we're the only country that has something like that. But then, of course, they bought a lot of really bad mortgages in the run up to the great financial crisis, and basically went bankrupt, and the government had to bail them out, and they did, and have put them into conservatorship is what they did. But the way they did it was they still left shares outstanding. And so a lot of people a lot of hedge funds got into the business of buying up Fannie and Freddie shares at pennies on the dollar, and have been sitting on them for 17 years now. And the Biden administration and the Obama administration had no desire to bring them out of conservatorship, but the Trump administration seems bound and determined to do that. They've been talking about it since he came back to office. It's complicated. It will be difficult, but boy, if you were Bill Ackman or John Paulson.
Pretty happy today?
You're pretty happy today, yeah.
Well, Trump also met with the CEOs of Bank of America, Citigroup earlier this week, and then last week Bloomberg News had reported that he met with Jamie Dimon and David Solomon over at Goldman Sachs Group. So I'm wondering, how difficult will it be to pull off a potential feat here when we're talking about an IPO? Well,
it's not so much the selling the shares, although it has to be designed in a sort of specific way, because the government owns 80% of the shares right now. And one of the big questions is, are you going to put the companies into receivership and basically bankrupt all the existing shareholders, which is what you normally do with a company that's going to come out of bankruptcy? Or do you leave them with equity in the new company, and then they make a huge profit? But the biggest problem is that because they have been owned by the government, and before that there was an implicit guarantee by the government, rates were low. You didn't demand an extra premium because you knew that they were insured and they were going to get paid. You were going to get paid either way because the government would step in. And so if the government steps out and lets this be a private company, then maybe mortgage rates are going to go up. And things like the mortgage rate lock, when you lock in a mortgage, that could go away. So there are a lot of questions about how this would be handled, and that's one of the reasons it's very complex. Jess, you were talking about the banks meeting with the president. They're looking apparently for a lead underwriter now. This is going to be a huge sale, so they would, I'm sure, have a consortium, but somebody's got to be the lead. And not just Paulson and Ackman are going to make money.
Mike, I feel like so many things this year we are saying are complicated, but I do wonder that it would be a very different entity. Both of them would be different entities if they are publicly held and it's not that quasi-public-private that we've seen, correct?
Yeah, and nobody quite knows how this will play out, because you would worry that rates will go up if they don't have a government guarantee. But does the government want to stay in the guarantee business if it's a private company? And we're basically subsidizing their low rates and their profits. So it's a tough call. This administration is very much a free market, get the government out of business stuff. So they're in favor of this. As are some of Donald Trump's biggest campaign donors, but it's not going to be easy to put it all together. And a lot of people in the mortgage industries have been concerned about this. I don't want to say they're worried, but they are concerned because they know it's a complex issue.
complex, and so not a given that this ultimately plays out. Mike McKee, thank you. And not old, just smart. That's why we love to have him on. All right, just one of the stories we're watching out of the nation's capital. The rest, I got to say, a lot has to do with geopolitics. Washington, Moscow aiming to reach a deal to halt the war in Ukraine that would lock in Russia's occupation of territory seized during its military invasion. That's according to folks familiar. We have Israel saying it will take control of Gaza City. We have a tense call between President Trump and Indian Prime Minister Modi that may be unraveling decades of U.S. policy. A lot going on, and there's some events at the White House as well. Bloomberg News senior reporter Jennifer Dlouhy is in D.C. Jen, busy day again in the nation's capital from the White House. I think top of mind, though, for many is what's going on potentially between Presidents Trump and President Putin. What do we know there?
Well, right. Bloomberg is reporting that Washington and Moscow are working toward a possible deal that would halt the war in Ukraine in exchange for allowing Russia potentially to occupy some of the territory that it seized over the last few years during the invasion of Ukraine. This is all, of course, coming ahead of a potential summit between President Donald Trump and President Vladimir Putin, potentially as soon as next week. We know that this could very well reflect the discussions that happened between U.S. Special Envoy Steve Witkoff and Putin earlier this week, Wednesday in Moscow. Coming out of that meeting, the U.S. Secretary of State had said those talks ended with a better understanding of what Russia wanted. And clearly, the idea of seizing territory or being able to occupy territory, and here we're talking about the eastern Donbas region as well as Crimea. This has long been a goal of Putin and of Russia. It is not at all clear that European allies and Ukraine would sign off on this or support this kind of arrangement.
All right, we're talking with our Jen Dlouhy out of D.C. Just want to take you to some live shots of the White House. We know that the president has several meetings going on. He is getting ready to greet the Prime Minister of the Republic of Armenia. That is expected shortly in about 20 minutes time. He is also participating in a bilateral meeting with the Prime Minister of the Republic of Armenia. So that will happen. And we're looking for some press conferences potentially out of that. So something we're monitoring, and certainly with so much going on right now, as Jen is talking about and laying out, we will certainly go to the White House and or cover those headlines. Jen, we are watching the activity. I want to go to this meeting here. He is the president meeting with the leaders of Azerbaijan and Armenia to sign a joint peace declaration aimed at ending decades of war. I got to say, important, but it hasn't necessarily been top of mind or on our radar. But what do we need to know here?
Well, what is, I think, most important about these deals for a U.S. audience, or certainly very intriguing, is that these pacts that are going to be signed later today will give the U.S. essentially rights to develop a transit route through this region that has been in conflict for decades. The U.S. is set under what is going to be signed today is set to get this ability to access this region across southern Armenia, getting to an area that borders Turkey. It's even being branded in the president's honor. It's going to be called the Trump Route for International Peace and Prosperity, according to administration officials. And the idea here is that this is the win for the U.S., of course, that it would open up some new trade opportunities for Armenia, but only in partnership, or really in partnership with the U.S. There will be commercial talks on this later, potentially next week. But this is, being portrayed by this White House as kind of a win for Washington, as well as a win for Azerbaijan and Armenia, potentially ending decades of conflict, and at the same time kind of delivering a setback to Russia, Iran, and China, who've been able to leverage the conflict in the region.
Well, Jen, my question was who was not going to benefit from that? And you just were mentioning, obviously, Russia. Talk to us more about the rippling effects there.
I mean, this is obviously, Azerbaijan and Armenia have been in conflict since, the waning years of the USSR, right? And the conflict there is seen by at least White House and administration officials as, it's been an opportunity for Putin to he's used that as leverage. Conflict in the region is something he benefits from. And so, you see the administration looking at ways to diffuse conflict clearly across the globe. The president is very fond of talking about the deals that the peace deals that he's trying to secure. And this is one that aligns aligns with the interest in keeping the pressure on Russia and limiting its influence overall. By the way, I just note that, some of the deals we're likely to hear the president talk about them again today in the Oval Office. But, he's described himself as being instrumental in helping get a treaty between the Democratic Republic of Congo and Rwanda, ceasefires, obviously, between Iran and Israel, and then, of course, the conflict with India and Pakistan.
Jen, anything else on your radar? And I ask so naively because there's so much here, but anything else in terms of what you're watching from the president and possibly the White House today?
There are going to be lots of questions, of course, about those Russia-related sanctions and whether the president is going to follow through on what was a 10-day threat 10 days ago to impose sanctions on purchasers of Russian oil and energy products. He's already taken action against India. The big question, of course, is whether he'll move against China in some way or otherwise sanction the regime and try to choke off Moscow's oil revenue.
Yeah, it's all so interconnected in so many different ways. Jen, thank you so much. Again, busy out there in D.C. and finding time for us. Bloomberg News senior reporter Jen Dlouhy there in the nation's capital. All right, we're going to continue on the geopolitical because it really seems to be a major theme when we look at what's going on today. Joining us now is Wendy Cutler, Vice President of Asia Society Policy Institute. She joins us from San Diego. Wendy, so good to have you here. We just did kind of a rundown from our Jen Dlouhy in terms of all the stuff that is going on. I want that whiteboard, U.S., China, India, Russia, Iran. Talk to us a little bit about the news coming out of the news flow about geopolitics and the U.S. role and what they're trying to do. And maybe we start with Russia, because it is curious whether or not something will ultimately get done to end this war, because it does seem like President Putin is going to stand pretty pat when it comes to his demands.
Look, it's unclear how this is all going to develop, but it's clear that the president is very determined to use his office to try and broker a ceasefire. What I'm watching on the trade front, however, is how this may impact our relations with India right now, because we are in a 21-day period where the president has threatened to increase India's tariffs by an additional 25%, taking them to 50% due to their purchases of Russian oil. But perhaps if indeed there's some progress made with Russia, that will provide an opening to remove this threat and impending tariff hike.
Talk to us more about what this would mean for, say, India's relationship with Russia, or maybe even China's relationship when it comes to Russia as well.
Yeah, so for India in particular, look, we've spent 20 odd years trying to strengthen our relations with India. The past 2 weeks, the relationship has been spiraling downward, and it's going to be hard to rebuild. And I think in many respects, India is going to gravitate, not in a major way, but gradually more towards China and Russia, viewing us as an unreliable partner.
So that's what I want to ask you. I mean, I like to remind or have someone remind us about why it is so important that the U.S. continue to have positive relations and a positive relationship with India. Remind us about that and what could be at risk if India is much more aligned with China rather than the United States.
Well, we have looked to India as the counterweight to China, both on the strategic front, but also on the economic front. On the economic front, we have been encouraging our companies to leave China. And one of the destinations they've been gravitating towards is India. So many U.S. companies now are expanding their operations in India. If relations start going south, this is all kind of, throws things up in the air. And the last thing the U.S. business community needs right now is more uncertainty. There's enough uncertainty with all of these tariff announcements coming out on a daily basis.
Do you think there's been long-term damage with that bilateral relationship?
Absolutely. Again, you spend years and years building a relationship, building trust, but it can take just a matter of hours or days to break that trust. And so rebuilding it is not going to happen in a matter of hours or days. And we're not just seeing this with India. I'm just back from Japan, and I'm kind of hearing the same thing, that, the Japanese, who've been a very strong ally, are looking at the past couple of months and how they've been, in their view, kind of jerked around in these trade negotiations, and are also talking about developing some kind of plan B where they become less reliant on the United States. So this is long-term implications, and again, hard to rebuild trust in a short period of time.
What has happened here? Because when the president came back to the White House earlier this year, he did look set to build upon kind of the warm ties he had with Prime Minister Modi during his first term. He had called the relationship the best it's ever been between two leaders of the two countries. And the Prime Minister called President Trump my dear friend. Is this just, I don't know, gamesmanship? I try to kind of understand what we hear, what we see sometimes, and then what's, a new set of headlines that shows something very different. So should we take this at face value that the relationship really is breaking down, or is it just the negotiating process between leaders of two really important countries?
Well, look, a few weeks ago, everyone was saying we were on the verge of an early trade deal with India. And there was a lot of optimism about that. And somehow the trade deal got derailed. It could be that the U.S. was asking for more, but a combination of India couldn't meet our last few requests, particularly in the agriculture sector, which is very sensitive for them. But I don't think that's the whole picture. Obviously, something happened that made the president extremely frustrated. Maybe he got the numbers of how much oil India continues to buy from Russia, and that, somehow rubbed him the wrong way. But again, the words he's been using towards India, I don't think this is something that you just turn around overnight. It's pretty deep right now. And if you talk to the Indian officials or the Indian public, I think that there is a lot of deep-seated anger, and frankly, they don't really understand how this spiraled down so quickly either.
What are your eyes on next when it comes to a timetable? I know August 12th, that's that deadline for the decision on Chinese tariffs coming up soon.
Exactly. Next Tuesday is key. I'm counting on that we will roll over the tariff truce that we achieved with China 90 days ago. And then I think we are going to see a continuation of negotiations with China to try and see if we can do some kind of deal with them in the lead up to a possible meeting or visit by the president to China around the Korea APEC meeting in late October.
What I wanted to ask you is, just to kind of wrap up here, Wendy, and again, devil's in the details. We'll see what ultimately happens. And whether or not they come back to the table and they become friends again. But I guess if there is a broken relationship, which is how it seems right now, and that lasts longer term, what's the cost to the United States?
With India?
Yeah.
Yeah. Look, the cost is, we have damaged a relationship with an extremely important partner that is only becoming more important on the global stage, and particularly at a time when we want to diversify away from China. This does present serious concerns.
How much is China watching this, in your view?
Oh, very, very closely. And I would expect that China is going to make overtures to India right now in an effort to bring India more in their camp. Now, let's keep in mind, though, China-India relations historically have never been good. And so I don't expect India to move to the China camp. But again, I think they're going to hedge their bets and view the U.S. as less reliable and gravitate both towards Russia and China, frankly.
And even that they could possibly talk, or that we're even talking about them possibly talking, is just shows that things could possibly be shifting. Wendy, so glad we could get some time with you on this Friday, a very, very busy Friday, certainly when it comes to geopolitics. Wendy Cutler back with us. She is Vice President of Asia Society Policy Institute, joining us from San Diego. Wendy, thank you again. All right, folks, coming up in just a moment, we're going to take a look at the company Upwork. We've got the company's CFO joining us in just a second. In the meantime, we want to get back to the markets as we have a about an hour and a half before we wrap up trading on this Friday, and we do see stocks rallying near their highs of the session. For more, let's turn things over to Charlie Pellet.
All right, I thank you very much. Indeed, we do have the S&P 500 index at a record right now. Got to begin with gold, though. Repeating the story that we brought you at the top of the hour, the Trump administration is suggesting it will issue a new policy clarifying that imports of gold bars should not face tariffs. The White House intends to post an executive order to clarify what an official called misinformation about the tariffing of gold and other specialty products. Stocks heading toward records amid solid corporate results in hopes that the U.S. and Russia will reach a deal to halt the war in Ukraine. Also, investors sifting through many corporate earnings reports. The S&P right now, 63.92. That is a record. If we close there, that would be above 63.89, the old high. Right now, the S&P up by 0.8%. The Dow up 259. That is a gain of 0.6%. NASDAQ up 203, an advance there of just about 1%. Our Mag 7 index surging now by 1.5%. Yes, the Mag 7 index is at a record. 10-year 4.28%, the 2-year 3.75%. Gold flat on the day, 33.96 the ounce, and West Texas Intermediate crude also a little changed, up under 0.1%, 63.93 a barrel. Gilead Sciences now at the highest in 10 years after boosting guidance, lifting its full-year outlook after strong HIV sales in the second quarter. Gilead right now up by 8.3%. And Apple extending its 3-day rally to 14%. That is the highest since March, up another 4.5% today, also helping lift our Mag 7 index to a record. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're going to go back a little bit to earnings because that's definitely been on our radar as of late. I know we talked a lot about geopolitics, and we might roll a little bit of that into our next conversation. We want to go to Upwork. Shares rallying big time yesterday following their quarterly update. The online recruitment company reported second quarter results that beat expectations. They also raised their full year forecast. The $1.7 billion market cap company, it connects businesses and independent professionals, so freelancers and others, for remote work opportunities. The stock down more than 20% year to date, and about 10% of the float is short. The company, though, a useful indicator of what is going on in the labor force. And so let's get to it. Today's CFO briefing. With us is Erica Gessert. She is Chief Financial Officer at Upwork. She joins us from San Francisco. She will be featured in an upcoming edition of the Bloomberg CFO Briefing newsletter, which you can find at bloomberg.com/CFO briefing. And also with us is Nina Trentman. She's Bloomberg News senior editor who writes the Bloomberg CFO Briefing newsletter. She joins us here in studio. Eric, good to have you here with Nina, Jess, and myself. Your stock did soar on your latest quarterly update and outlook. Talk to us about the business and what's driving growth.
Yeah, thanks so much, Carol. It's great to be here.
Yeah.
We had a standout quarter in Q2 in so many ways, but I think really the most distinctive thing is the AI category of work. So many different types of work are developing in AI, and on our platform, our AI category grew 30% year over year in the second quarter, and that was actually an acceleration from the first quarter. And one of the other drivers is actually all of the AI enablement on our platform. So if you think about the hiring process just in general, posting a job, freelancers, bidding on a job, and then the interview process. Well, we have now enabled AI all across the hiring process, pulling out friction from every single part of the customer experience. And we actually attribute about $80 million of volume on our platform just from those improved customer experiences.
Erica, thanks for joining us. I'm just wanting to follow up on this. Of course, your platform operates all around the world. It's not just an indicator of job markets in the US, but also in other countries. Just wondering, if we're looking at your US business in particular, I'm wondering, what does the growth that you've seen in the latest quarter tell you about the state of the labor market more broadly?
It's really interesting, Nina, and hello, good to talk to you again. We overall, I think in the labor market writ large, there are obviously persistent headwinds hitting the labor market, the BLS data coming down, and public staffing. If you look at the kind of public market, public staffing companies, they reported about a 4% on average down quarter in Q2, and actually projecting even more kind of negative growth. We're actually really pleased in that context that, Upwork had a growth quarter in Q2, and that actually just shows the strength and the attractiveness of our digital platform. But, I would just say that the vagaries of the BLS data in general, if that's telling us anything, it's that things are really uncertain out there. And that uncertainty is affecting our clients and people in small businesses in general that are just unsure about what's around the corner.
When you're looking at particularly your share price actually being down roughly 17% year to date, why is that? And what do you think investors are telling you when it comes to their chief concerns right now?
It's a great question. And we obviously, disagree with what the market is saying right now. And I think that the reality is that some of these kind of broader labor market concerns are affecting a lot of stocks in the human capital industry, and we're kind of getting pulled down with the pack. Even though our results and the progress on the platform is really standing out from the crowd. I think that in general, there's been this concept out there that as these really, really exciting advances in AI come forward, that they're going to start to substitute work. And there's actually no doubt that in certain categories, at the very lowest end of the types of work that are getting done in writing and translation, you do see AI substitution. But on platforms like ours, where we actually supply much larger, more complex work with skilled workers, we're seeing AI actually enhance work and actually start to augment and accelerate categories that some people thought would be disrupted. Things like video and animation, contract law, accounting and bookkeeping. All of these categories are actually being accelerated and advanced by AI.
Yeah, Erica, we'll turn to AI in a second. I think Carol has a follow-up on that. I'm just wondering, you said one thing about the BLS that I thought was interesting, and actually one of the things I had wanted to ask you about. As the CFO of a business that is, of course, labor-related, I'm wondering what you make of the firing of President Trump of the commissioner of the Bureau of Labor Statistics recently.
Well, it's hard to comment on those decisions. I think these types of data get revised all the time. These were actually large revisions, but it's hard to comment on that decision. It was certainly very surprising.
Is it a data point that you respect and have looked at and compared it to kind of what's going on in your world?
Look, I mean, we of course, as a business, a business in the human capital industry, watch the labor market very, very carefully, and we have seen historically that our kind of volume related trend, what we call GSV on our platform, has some correlation to kind of the movement of the JOLTS report on a lagging indicator. But what we're seeing now is that all the improvements on our platform, and again, some of the strength that we're seeing in certain categories is actually helping us to kind of buck the trends of what's going on out there. And we're really we're relying on the strength of our platform and the advancements in our own tech to offset what continues to be a very, very uncertain operating environment.
Erica, Nina was right. I want to go back to AI for a moment because I'm kind of blown away that you say AI is kind of enhancing your work and your platform in a big way. Because I think there is this feeling like, could even AI make what you guys do obsolete at some point? But educate, because I think as we go along and we throw so much about AI into one little bucket, like help us understand how you're using it on the platform, how it is actually driving things in your business.
Yeah, so AI is driving things in our business in two ways. The first is, what I refer to as the AI enhancements on our platform. So just making it easier for our clients, which are, businesses of all sizes who are coming onto our platform, looking for great talent to get work done. In the past, they would have to write up a job post, post the job, interview freelancers, a series of freelancers, and the freelancers themselves have to write a proposal. Now all of that is done by AI, and it's taking what used to take hours and hours, down to minutes. So that's a huge advancement just in the enablement of finding a great match to get the work that you want to get done quickly and easily. But the even more interesting trends are really around how AI is enhancing every single category of work. I mean, what we're seeing on our platform is, freelancer, job descriptions popping up saying, hey, I'm an AI video animator. I'm an AI artist. It's not just prompt engineering or LLM building, of which we have, many, nearly 250,000, AI skilled talent on our platform. But it's really impacting every single area of work. And what we're finding is, it's enabling our freelancers to get work done faster, to get work done better. And clients are actually looking for freelancers who are using AI to get work done.
Hey, listen, we just have about 30, 40 seconds. I know Nina has one last question that she wants to ask just quickly.
Yeah, Erica, just wondering, you completed 2 transactions recently. I'm wondering, did any of the macro uncertainty influence those the deal making for those transactions?
That's an interesting question. I don't think the macro uncertainty, really played into it at all. These 2 game-changing transactions that we did, the names of the companies are BubTea and Ascend. These are really adding kind of digitally native capabilities to our enterprise offering to integrate, kind of an incredible AI kind of enhanced platform with our talent, as well as a broader contingent labor solution that will enable enterprises to, again, quickly and easily kind of get through all the red tape of compliance and everything else to hire the contingent labor that they need.
Thank you so much. You're so real. Love it. Erica Gessert, Chief Financial Officer at Upwork, featured in an upcoming Bloomberg CFO briefing, and of course our Nina Tretman, Bloomberg News Senior Editor. All right, coming up from Alphabet to Amazon to Uber and Zillow, Mark Mahaney of ISI, Evercore covers them all. He's our guest. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks heading toward records amid solid corporate results and hopes that the U.S. and Russia will reach a deal to halt the war in Ukraine. Here's where we stand. Just over an hour and 20 minutes to go until the closing bell, with the S&P right now up 51, a gain of 0.8%. The Dow up 254, up 0.6. NASDAQ up by 0.9%. Our Mag 7 index trading at a record, up right now by 1.5%. Apple keeps on going. Apple up another 4.4%. 10-year 4.28%. Gold just about flat on the day, down 0.1%, while West Texas Intermediate crude down 0.2%. The Trump administration is suggesting it will issue a new policy clarifying that imports of gold bars should not face tariffs. And sources tell Bloomberg Netflix is exploring a deal to stream Major League Baseball's Home Run Derby after ESPN walked away. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are keeping our eyes on the White House and for any headlines. We know the president meeting with the Republic of Armenia's prime minister. We are expecting potentially a press conference, or maybe he will take questions from reporters. So anyway, keeping our eyes on it, and we'll take you there if there is anything we want to bring and should bring out to all of you. In the meantime, man, it's been a busy week when it comes to earnings. Pinterest, Trade Desk, Expedia, Zillow, Lyft, Uber, DoorDash, Duolingo, Mountain, Spotify. And then the week before we had Booking, Amazon, Meta, and Alphabet. The next guest covers all of these companies. He is someone that is a must-read on Wall Street, closely followed certainly by our Bloomberg community. Mark Mahaney is Senior Managing Director and Head of Internet Research at Evercore ISI from San Francisco. He's also the author of Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. Mark, really great to have you with Jess and myself. How are you?
Hey, Carol, nice to hear your voice. Nice to see you.
Yeah, same here. I mean, it's been quite a week. I want to ask you just kind of big, broad macro, because it seems like so much of our world is being upended, or at least there's some uncertainty, certainly when it comes to various policies. Tech companies, sectors, overall definitely called out by the Trump administration. We've seen Apple's Tim Cook at the White House. We've had the Intel CEO just this week being called out in a negative way by the president. This administration, how do you think about it broadly in terms of policies and acts and actions that are impacting, could impact the technology industry and the investment potential?
Well, shoot, I could think of a lot of different answers to that question. I think the facts are this is the most activist administration when it comes to business, maybe since FDR. I don't know. I'm I'm a student of U.S. history, but you're stretching me there. But yeah, this is an extraordinarily activist administration. Anyway, so I guess that's one. And maybe the most obvious factor is tariffs, which are, at the end of the day, a tax. And so somebody's going to pay that tax, and it's either American businesses or it's American consumers. So yeah, that's out there. And then, yeah, there's a lot of pressure or attempts to influence these companies. So that's out there too. Look, all of that's part of the backdrop that all of these CEOs and these executives have to deal with. They're paid to deal with these kind of challenges. It's just unusually high, in this administration. The backdrop to the tech sector, however, there's some other things that are well within their control that are really lifting, what's a 3-year bull market now in tech stocks, and that's it's Gen AI and what we're seeing in terms of reduced costs and improved processes and improved products and solutions and offerings. It's really, we're going through a major super cycle here when it comes to Gen AI. I know it's been overhyped at times, but there's a lot of reality behind it, and there's some companies that have had really good stock price performance precisely because they're perceived as Gen AI winners.
That's right. And of course, when you're talking about AI, I have to bring up semiconductor and chip maker stocks. When you think about the juxtaposition between former President Biden's types of policies versus President Trump's call just recently for 100% tariffs on chips coming into the U.S., will all of this make for a more robust, domestically located semiconductor industry? Or is that really possible? Break that down for us.
I'm not sure I've got a really thoughtful, educated answer to that question. You're asking you're asking whether if you want to promote U.S. manufacturing, particularly in what are considered to be highly strategic industries, whether it's better to use incentives and subsidies. I think that crudely explains the Biden administration policy, or whether it's better to use, tariffs and browbeat companies to come back into the U.S. And I'm not sure. I mean, they're both active government policies into businesses, and so I'm not sure. It isn't just an interesting step up. I mean, we had a laissez-faire, economy. Generally, government stays out of the way of business, and we've had a lot of look. I'm out here in tech land. Most of these companies are out here, and they've been very successful, run by entrepreneurs. They come from different parts of the world. They come to California area and other parts of the U.S., and they create these extraordinary businesses, and they've done it on their own. I mean, there's always some help there, but they've pretty much done it on their own. And I think that's actually created a really good situation for people in this country. I hope we don't spoil that.
Well, let's get to some of the numbers that we got this week and certainly the week before. I caught some of your calls following the updates. Zillow was out this week. You raised your price target on it. Uber, too, you raised your price target on that one to 150. DoorDash, you upped it to 360, the price target. What companies' results showed to you kind of a more interesting investment thesis as a result, either this week or last week when we got some of the big major tech names?
Well, I like to set up on a question. So where I thought we had some just really surprisingly constructive, positive results, I thought DoorDash was in that list. We had some record high operating margins out of that company. Meta was definitely in that list. And most of the other names, I thought those are kind of two standout companies. Maybe Booking.com was in that list too. The other names, we had some good prints out of names like Google. We had some good prints out of names like Amazon. But the really strongest, kind of cleanest prints, there were a few in there, and I would put Booking in there, DoorDash, and those would probably be at the top of the list. And if you just step back, because we started off talking about some of these macro concerns, and these companies give you a very broad read into the economy. They do, into consumer demand, into some enterprise demand. And if I'd use one single word to describe the results of this earnings season, it's resilience. It's not like we had a positive inflection, although there are a few cases where that happened. But generally, the overall view is that spend has been relatively resilient, and it's at a relatively robust level for these companies. It's this may change in the back half of the year, but so far so good.
Mark, you're comfortable with Meta in particular. I mean, we had some news today, too, that they have selected PIMCO and Blue Owl Capital to lead a $29 billion financing for their data center expansion in rural Louisiana. It's all about the race for AI infrastructure. We know that. This is, according to people familiar, that major mega spend and the talent grab and what they're spending for AI talent, Meta, you're comfortable with all of it.
Well, I guess if they keep putting up prints, if they keep putting up fundamental results like they are doing, where they're using AI to improve their cost structure, but also to improve their products, like you're getting an ROAI, return on ROI, return on investment, ROAI, return on all that AI CapEx spend and OpEx spend. They took their revenue growth and they reaccelerated it despite being at the scale that they're at, 150 billion roughly revenue run rate. They took their revenue growth and accelerated to 20%. That didn't come out of nowhere. They were using AI to better target ad campaigns. And so marketers are getting a better return on their Meta ad spend. And then consumers are finding the service better. I mean, the evidence is that they're spending more time with Meta. They're spending more time with Instagram. There's nothing more objective than just time spent. So Meta's been able to use all that AI investment to improve their product, improve their service. And yeah, so if you keep doing that, you absolutely, you earn the right to spend more, to invest more.
All right, we've got to run, unfortunately. Thank you so much. And I really appreciate you going macro with us and then also drilling down a little bit on some of the companies. So appreciate it. Mark Mahaney, he's Senior Managing Director, Head of Internet Research over at Evercore ISI, author of Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts, joining us out there out west. All right, folks, we're watching the White House, looking for headlines, seeing if the Trump administration and the president might make some further announcements on whether it's trade, tariffs, and some of the geopolitics that are going on. We're also going to get a check on some of the stocks on the move. That when we continue.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, almost coming up on the last hour of trading here on this Friday, getting ready to wrap up the day and the week. As we mentioned, we've got a rally underway, so we're near our highs on the S&P 500, up about 0.8%, and we've got the Nasdaq 100. It is moving up more than 220 points, a gain of about 0.9%. I'm Carol Massar, along with Jess Menton here at Bloomberg headquarters in New York City. Let's get to Bloomberg News equities reporter Natalia Kniazhevich. She is here with stock movers at this hour, and one reported earnings after the close last night.
Right. So I'm looking at shares of Trade Desk. The ticker is TTD. The stock is down by 37%, and this is currently the worst performer in the S&P 500. So we see that revenue and EPS of this advertising technology company came above expectations, but that wasn't enough to impress investors. We saw at least 4 downgrades across analysts. Some of them were citing, of course, concerns about revenue growth and competition coming from Amazon. Specifically, they said that Amazon did some improvements in a demand-side platform where advertisers buy ad and they can target specific audience. So a lot of issues for this company, and the stock is really sinking.
And we actually sit next to each other over on the equities team, Natalia and myself. So she's been busy on the wrap today, too. But I know another one you're watching, and this was a company that reported after the bell yesterday, Sweet Green, ticker symbol SG here. What is going on, and why is it down so much right now?
Yes, it looks like U.S. consumers are becoming much more cautious and much more like pickier, right, when they buy a meal. So we know that this salad chain, they sell salads with average cost of $15 to $20. So the stock is down by 24%.
And that was actually close to where it priced its IPO a couple years ago, too.
This is a good point. Yes, and this is the biggest intraday drop, of course, on record. The IPO was in 2021. So the salad chain slashed guidance, missed second quarter estimates, and lots of, again, concerns about potential growth for the company. One analyst said that from William Blair, that he said potentially the company will need to raise capital at some point before the end of 2026. Wow. And shares are down by around 70% on a year-to-date basis.
It's been a stock that was around 53 a share, and it's now just under $10 a share. I don't know. I don't know whether it's competition overall. I like Sweetgreen. I've eaten there, but I do wonder whether it's a tell on, the U.S. consumer or just, increasingly a lot of competition, right, when it comes to lunch. I don't know.
It seems like, a lot of those places too, in general, for those salads seem like they're just getting pricier and pricier. At least there's one close to me where I live in Manhattan, and I feel like I don't want to go as much if I'm spending close to $20 for a salad. I could do something else.
It's a lot, I guess, right? Like if you think about it. And I will point out 20% of the float is short. So investors, that negative sentiment continues. All right, we've got an IPO story today.
Yes, again, it's exciting that the IPO market is finally somewhat recovering. So the company is Heartflow. The ticker is HTFL. And it's a positive story. We see that the stock is up by almost 50%. This is the first day of its trading debut. This is the AI software platform focused on heart diseases. It raised more than $300 million, but it's still an unprofitable business. So this price reaction potentially gives some hope for investors who like biotech IPOs, right, or medical device companies, because the last two companies that went public from this area, one of them is surgery implant maker Shoulder Innovation. Another one is AI software firm Carl Smith. We spoke with CEO on your show. So both of those companies are trading below their offering prices. So yes, we see a revival, but again, it's all about crypto or AI, but this is a positive story in the healthcare sector. I don't know what it means for the future.
I don't know this company, but apparently their platform aims to make coronary artery disease a screenable, diagnosable, and manageable condition by creating a personalized 3D model of a patient's heart and generating data on blood flow and plaque levels. So I think we keep hearing, right, of like going inside the body and looking at it and creating, what your particular condition actually looks like and getting a better handle on it.
Exactly.
Brave new world.
It is. And Natalia also covers our ECM column for all things IPOs. I'm just kind of wondering, when you're talking to your sources, where do they see things headed for the second half of the year and maybe even in 2026?
Yes. It's interesting because on the one hand, we expect some kind of revival after the IPO, after the Labor Day. One of the nearest IPOs that could potentially happen next week. It's bullish, right before the Labor Day. We'll see how it goes. But again, this is a crypto name. However, I hear more and more on background conversations that actually 2026 will be a year of IPO. This is the same what we heard about 2025.
Right.
All right, something to keep a watch on. Thank you so much, Natalia Kniazhevich with Stock Movers. For more conversations, check out our new Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. All right, folks, we're heading towards our last hour of trading here on this Friday and for the week overall. We should point out we continue to keep an eye on D.C. and the nation's capital. The president, several meetings, and you can see officials and various individuals kind of milling about there outside the White House. We do know that the Prime Minister of Armenia has arrived, and we are waiting on the Azerbaijan Prime Minister as well. He is expected to be there, and they are expected to be signing a trilateral agreement. So we'll be watching that and bringing you the headlines. All right, that's going to do it for this hour. The close coming up your way next.